Before we delve into the controversy, it's essential to understand what a wealth tax is. Picture this. Let's say you've got a treasure chest of assets. That could be anything from property, stocks, to your beloved yacht. Now, a wealth tax is like a yearly subscription fee you'd pay based on the total value of your treasure chest. Quite different from income tax, which is based solely on your earnings, right? Now, why is this proposal being considered in India? Well, in a country with a stark wealth gap, it's seen as a way to redistribute wealth, making for a more balanced society. Critics, however, argue that it could discourage investment, stifle economic growth, and encourage capital flight. As with any tax, it's a hot topic with strong opinions on both sides. The proposal for a wealth tax in India is not without its controversies. The wealth tax, a levy on an individual's assets, has sparked an intense debate among financial enthusiasts, economists, and policymakers alike. On one side of the debate, proponents argue that a wealth tax could be a significant step towards creating a more equitable society. By taxing the affluent, they contend, we could address income inequality and redistribute wealth more fairly across India's vast population. This, in turn, would promote social stability and potentially stimulate economic growth by increasing spending power among the middle and lower classes. However, critics of the wealth tax raise some compelling counter-arguments. They caution that such a tax could discourage investment and economic growth. After all, if the wealthy are taxed heavily on their assets, they may be less inclined to invest in businesses and entrepreneurial ventures. This could stifle innovation and job creation, ultimately hindering India's economic progress. Moreover, there's the concern about capital flight. Faced with a hefty wealth tax, high net worth individuals might opt to move their assets abroad to more tax-friendly countries. This could result in a significant loss of wealth within India's economy, defeating the tax's original purpose. In addition to these economic considerations, there's the practical question of how such a tax would be implemented and enforced. Determining an individual's net wealth is no easy task, and the process could be complex, costly, and prone to errors. Not to mention, it could open up new avenues for tax evasion and avoidance. Clearly, the wealth tax is a complex issue with no easy answers. It's a balance between creating a more equitable society and promoting economic growth, a juggling act between redistribution and capital formation. What are your thoughts on this matter? Do you believe a wealth tax could be the key to addressing economic inequality in India? Or do you think it would do more harm than good? We want to hear your perspectives. Share your opinions in the comments below. Now let's broaden our perspective. How does India's tax policy stack up against other countries? Let's take a quick look at the tax landscape in 3 different nations: the United Arab Emirates, the United States, and Germany, to provide some context. First up, the United Arab Emirates. The UAE is known for its low-tax environment, which attracts businesses and high-net-worth individuals from around the globe. The absence of personal income tax is a significant draw, making it an appealing destination for those seeking to minimize their tax burden. The UAE's approach is a stark contrast to India's proposed wealth tax, which is geared towards redistribution of wealth. Next, let's consider the United States. The U.S. employs a progressive tax system, meaning that higher-income individuals pay a greater percentage of their income in taxes. The American tax code is complex and layered, brimming with various deductions and credits designed to encourage certain behaviors and investments. This system, while intricate, promotes a balance between wealth accumulation and socioeconomic responsibility. Lastly, we move to Germany, a country with a progressive tax system similar to the United States. Germany's income tax rates may be higher, but it also offers robust social welfare programs. These programs, funded by the tax revenues, contribute to a more equal society by providing support where it's most needed. It's a different approach to addressing economic inequality, one that focuses on providing services rather than redistributing wealth. As we can see, each country's tax policy reflects its unique socioeconomic context and priorities. The UAE focuses on attracting wealth, the US on balancing wealth accumulation with social responsibility, and Germany on providing robust social welfare. Taxation policies vary significantly worldwide. India's wealth tax proposal is just one piece of a much larger puzzle. As India navigates this complex issue, it will be interesting to see how it shapes its taxation policy in the coming years. Will it lean towards wealth attraction like the UAE, balance like the US, or robust welfare like Germany? Or will it carve out its unique path? Only time will tell. To conclude, what steps could be taken to address economic inequality and potentially decrease the tax burden in India? It's a question that requires us to think beyond the usual confines of taxation and economic policy. Firstly, enhancing tax compliance could be a crucial step forward. By ensuring that everyone pays their fair share, we could more effectively redistribute wealth and reduce economic inequality. But this isn't just about enforcing existing rules. It's also about closing loopholes and eliminating gray areas that allow some to avoid paying their dues. Secondly, we can't overlook the importance of economic growth in this equation. Policies that encourage job creation and investment can indirectly contribute to wealth distribution. When more people have jobs, more people have income. And when more people invest, more people have the opportunity to accumulate wealth. It's about creating an environment where prosperity is not just possible, but probable. Lastly, we must acknowledge that the economic landscape is constantly evolving. The tax system of today may not be the tax system we need tomorrow. Therefore, it's crucial to continuously reassess our tax policies and fine-tune them to align with the changing economic conditions. This could mean introducing new taxes, like the proposed wealth tax, or it could mean reforming existing ones. But let's remember, these are just potential steps. The path to economic equality is not a straight line. It's a journey that requires constant navigation and adjustment. And while the destination may seem distant, every step we take brings us closer to a more equitable society. That wraps up today's discussion on Indian taxation policy and the proposed wealth tax. Don't forget to share your thoughts in the comments below. And if you found this video insightful, give it a thumbs up and subscribe for more